Hello and welcome to Bloomberg Quint. We celebrate the end of every trading week by heaving a sigh of relief and saying, thank God it's Friday. We also celebrate it by speaking with a market expert on what that week has meant for India's equity markets. Well, today we have the expert of all experts, a man who needs very little introduction, Raamdeo Agrawal. He's been a man who has spoken widely about his investment philosophy, which has predominantly been a value investment philosophy for most of his life. We have Mr. Agrawal today here with us to talk about not just what the last week's been like for the markets, but to give us a much longer perspective on where Indian equities are headed. And to speak with him, I'm joined by my colleague from Bloomberg Quint, Agam Vakil. Well, Agam, hi, and Mr. Agrawal, thank you and welcome to Bloomberg Quint.
Most welcome. This is the first time and I'm very excited.
I am very excited as well. This is your first Facebook Live, isn't it?
Yes.
Okay, great. So we're hoping that all of you will send in many questions for Mr. Agrawal and don't ask for specific stock picks. It'd be nicer if you try and gauge from him all the sort of learnings of his life that have helped him become such a successful investor. I'm going to start by asking what you might call a slightly more shorter term question. Where do we stand today in India's equity markets, given the macroeconomic indicators, where we are from either an inflation point of view, an interest rate point of view, or given what you assess of the earnings season that's just winding down?
Yeah. Menika, thanks for giving this opportunity. And
Delighted.
So, assessing market, this is like you're asking how is the swimming pool for a, Phelps or some swimmer. Market is always ready to welcome the investors,
Okay.
And I'm speaking for the investors, not for the traders.
Right.
And traders, in any case, they can make money in good time as well as bad time, So for investors, when should investors avoid the market? When markets are completely euphoric, when it is so much overpriced that even a shoe boy is giving you tips and IPO market is booming and valuations are crazy. And market cap to GDP is more like 1.5, 1.7, 1.8. So we are not in euphoric times. We are not depressed. We are not at 30-40% of GDP, 9-10 P. There is nobody on the street. It's not like that. But right now we are nice, 24-degree temperature. It's a nice shiny afternoon. You must go for shopping, and this is the time to build nice portfolio. India is in a very unique situation. India has low, we always had problem from the oil, so we had high current account deficit. So rupee was always under pressure. That huge problem is not there at all. One, the current governor has done a wonderful job, but more than that, even the God has done a much better job. Oil is at $40. Second is, your monsoon is, after so many years, we have got a ample monsoon. I was seeing today a map. I think barely Punjab and something in northeast and very small portion in south somewhere, I think Chennai or something. Everything else is either flooded or normal.
Yeah.
So this is after a long time I'm saying, even in Mumbai we are saying after a long time intense monsoon. Yeah. Okay, so this has its own merits, which will play out in the next 4 months. You have inflation under control. Desirable is even lower, but 6% is this thing, not very high. But I think one of the things which people are missing is that what is the global environment. See, we are no more isolated in the world.
Absolutely.
And I don't understand much of global macro, but today, $13 trillion, day after day, the bond prices all over the world is going through the roof and yield is sinking.
Yeah.
Okay, yesterday when you see the FT headlines, because of bond buying, there is a global collapse in the yields in one day.
Yeah.
Today we are at almost at 7 or 7.1 before even the rate cut.
Yeah.
So what we are talking about, the world is awash with the liquidity. Awash with liquidity. We used to curse Greenspan. Today it is multiple times bigger than
Greenspan. It's Greenspan to the power of 100, isn't it?
Something like that, and it's still on. That 100 is becoming 110. So we are completely floating. So and India is in a very unique situation. There's one growth economy, large growth economy, which can attract all forms of capital. The issue is how much we desire to get in debts, in bonds, in equities. So the equities which can afford, which are good, which are corporations which are of the size, which are managed well, and fortunately we are blessed with a lot of good corporations. And if they are reasonably priced and there is a growth, there is no dearth of buyers. You will get some crazy number of buyers for those companies. So this is the time to build a portfolio of good companies. You'll be surprised. They will do well in any case, but there is a icing on the cake that global liquidities can push it to different levels.
Okay. I do want to ask you about when this party that's going on, the liquidity party, at some point is going to come to an end, and there's going to be this crazy hangover. We will all suffer because of it. But I think maybe I'm sort of jumping many questions before that. I know Agam has a bunch of questions on really what you make of earnings, what you make of valuations.
Sure.
So let's ask you a few more specifics about the domestic markets before we get to the liquidity issue. Agam?
Well, I actually wanted to know about the earnings. Firstly, when it comes to quarter 4 and the quarter 1 earnings, not everyone is very happy with the earnings. So I want your reading on how you've seen them. And I also want to know if whether or not you expect these earnings to pick up in momentum going forward.
See, earnings will pick up momentum. I mean, nothing. If you ask me, do you know next quarter is going to be much bigger than this quarter? I don't know. I mean,
But
that's
are you
not the
happy
outlook.
with this quarter?
Yeah, broadly, my portfolio has done well. See, what?
We should ask you what your portfolio is.
So
That's the
my
key
portfolio,
question here, isn't it?
except for one or two bit of disappointment, not even disaster, everything is fine. In fact, we have got more surprises, positive, than negatives.
Okay.
So much.
Okay.
So, what has happened is market has become very narrow in terms of, quality is there, companies are there, they're stable, but companies which are very successful right now, they're fewer and fewer.
Handful, yes.
Very handful. So you have to be smart in kind of picking those companies. You have to actually anticipate who will be successful, and hence they should find position in your portfolio. See, when they are successful and then you go buy, it doesn't work. So you have to anticipate rightly and position your portfolio like that. And the QGLP, the format which we talk about, our philosophy, which we'll talk a little later, that philosophy does exactly that. It anticipates where the ball is going to be, and that like a right finger, he is there, hoping that ball will come, and then he will shoot the goal.
Okay.
But I also want to address the 1-year forward P for the indices right now is around 18-19 times.
Yeah.
Does this number matter right now anymore? I know that it is higher than the average, historical average that
More
we
like
see.
15, 16. Yeah, it is there, I understand. But earnings itself is depressed. See, how do you do the PE multiple?
Right.
Price. See, when we are doing markets, then we are doing the total market cap. Now, do you know what is the total market cap? It is 110 lakh crores.
Right.
Okay. Now, the total profits of all the listed company is about 4 lakh crore plus. Okay. When you do that, it works out to be about, it will be a little higher actually.
Right.
Because market cap is including the loss-making companies.
Correct.
All the banks are making losses, but their market cap is also there. So, for aggregate market, it might be even higher than 18 or 19.
Right.
Okay. So, the issue is that earnings are depressed. The market cap to GDP, corporate profit to GDP, there is a correlation.
Yeah.
So, you are on a 145 lakh crores of GDP, you are making just about 4 lakh crores profit, which is less than 3%. Okay. The normal levels are between 3 to 7 or 8.
Okay.
Okay, so as the economy recovers, what will happen is the GDP will keep growing at about 10-12%, and the corporate profits will not grow at 12%. Whenever it starts, it will grow at 15%, 20%, 30%.
So it'll exponentially increase.
Exponentially increase, and eventually it will peak out at say 6%. So in 6 years, next 5-6 years, GDP will definitely double. Nominal GDP will double to say from 145 lakh crores to say 300 lakh crores. If by chance the corporate profits are about 6%, so you're talking about 18 lakh crores profit. So from 4 lakh crores, you'll go to 18 lakh crores, which will be 4.5 times. So keep the P multiple same, you are talking about 4 to 5 times in next 6 years.
Right.
Mr. Agrawal, that's an extreme bull case scenario, isn't it?
But we are bulls.
Well,
And
I'm not
certified.
denying that, and I'm
Yes.
going to question even that position in
Yes,
just a
yes,
bit.
yes.
But you don't think, Jeff, therefore, just to get it in very simple terms, as Agam asked you don't think the markets are overvalued right now, given that earnings season after earnings season, we seem to be stacking up
Markets are not
disappointments.
overvalued, stocks could be.
Okay, stocks are overvalued. Yeah.
Stock,
But in
individual
pockets,
stocks,
in pockets,
yes,
in pockets.
always. You'll find some, if there's a madness going on for the relative performance of something, you cannot, in a market of 3,000 stocks, there will be 10, 20, 30 stocks will be excessively priced, but not the market as a whole. At 70% to GDP, no market, India has traded between, say, in the absolute worst of the day, maybe 40% to 180%. 2007, when we peaked out, our GDP was 45 lakh crores. My market cap was 73 lakh crores. 1.8 times. Today it is just the ulta. We are at 110 lakh crores market cap and 145 lakh crores GDP. So at 70% to GDP, it can fall by 10%. I'm not saying the market cannot fall up by 10% or 15%. I'll be very surprised after 12 months. I mean, at least give investor 12 months time. In 12 months, it is significantly below current levels. I'll be very surprised.
Okay. I'll be very surprised that in 12 months it is significantly below current levels. I think you should read that sentence very carefully, Agam, because essentially this is, Mr. Agrawal saying it may move up or down, but there doesn't seem to be any big depletion activity that's lined up according to him.
Yeah, but
right?
during 12 months, there could be a deep
No, that's
correction.
fine. I get it. I know.
But it must come back.
Yeah. So I'm just making
Yes,
it sure
yes.
that all our viewers are, getting every word carefully out there. Sorry, go ahead.
So, sir, you've extensively spoken about value migration in a lot of your previous conversations. I want to know where is that going to in terms of businesses and sectors over the next 5 years or the 10 years? Because I know that market dynamics are extremely and rapidly changing from month to day to second, every second. So where do you see the sectors which should benefit or the sectors which could come up from here?
Yeah. So, value migrations are, it's a long story. I mean, apart from large, it's a very long story. So, very near home, public sector banks to private sector banks.
Right.
But that shift's already played out, hasn't
What?
it? Not yet?
We are only 25%, 30% in private sector banks.
Okay.
And 70% is still with this so-called public sector
So
banks.
the large part of that transition or shift has to yet play out according to you.
No, it will be other way around. 70% will be private.
Yeah, I get it.
30% will
So
be...
this transfer of let's put it this way, the business,
Yeah.
sort of from public sector banks to private
Yeah,
sector
and
banks
now,
is only half played out according to you.
One
as yet.
third.
1/3.
And the best is still ahead. So what can it do is that now there is a banking license on tap. So you don't have to be a very blessed guy to get a license. Okay. Now 20 licenses have already been given, and I don't know how many guys will come and take it on tap out of tap in next 12 months or so. So what happened last time? You got out of the 10 or 15 licenses which are given, you got one HDFC bank, you got one Kotak bank, you got one. So many in bank. So all these banks, ICICI Bank, Axis Bank, these are the ones which are huge wealth creators. We are going to see. I mean, when HDFC Bank came, it got listed at $40. 200 crores was the equity in '96. For 800 crores, you could buy the entire bank. Okay, today the bank is 3 lakh crores.
Yeah, I know.
So what I'm saying is these kind of opportunities are going to come up. And what HDFC Bank did in 20 years, some of the banks are going to do it in 10 years.
Okay, so I want to know which ones you're talking about.
So
But,
that's-
but
I don't
before,
know.
before I put that question
but
to you,
they just
I'm
already
a
started
little-
a license, you
No,
know.
I know, I get that. But
Yeah.
I'm just a little concerned about where we are in the, sort of the asset cycle or the bad loan cycle. Because for a very long time, we saw it play out in the PSU banks. And in the last few quarters, we've seen it play out in the private sector banks as well. You've seen that happen with Axis Bank. You've seen it happen with ICICI Bank. And word on the street is that it's in fact going to get worse from here on for the next few quarters. So therefore, how do you take stock? I mean, I'm looking at this from an investment point of view, not trader point of view. So I'm not saying what do you do next week or next month. But are you fearful that a large part of the business that these banks have been doing is fairly suspect at this point in time?
So I don't have any view on that. You might be knowing better about them. Okay. So the way we play is that we buy the banks which don't have these troubled assets. That's the only way to play it.
But how do you know that they don't? Because we've discovered in the last few quarters that they were pretending they didn't have it.
Yeah, but that's where the investing skills come now. We have to do some homework.
So then you're buying HDFC Bank, which doesn't have a book in that side at all, right? They're mostly focused on
so
consumer loans.
why do I have to have troubled book in my book?
Okay, fine. Okay, so then we know you're investing in HDFC.
Yeah.
That's it, right? I mean,
That's
that's
how-
not you,
No.
but that's the better
see,
pick. Yeah.
The point is, when you know the credit cycle is against you, and surprises are going to come. Even the banks don't know how many book accounts will go bad. So stay away. And at somewhere there will be an opportunity for us to look at those banks or that's not my style to buy what was very cheap, what is very cheap and the asset cycle has gone through. But fundamentally avoid these kind of situations.
So you've said two things to us so far, Mr. Agrawal. You've said that you're expecting the large part of the shift from the public sector bank to the private sector bank yet to play out. You said two-thirds of
It's
that
playing out.
strategy
It's playing out.
is yet to play out, right?
Yeah.
And on the other hand, you're still telling us that many of these private sector banks, in fact, might not be disclosing the real status of their
anything. No,
assets.
I have not said anything on that.
Stick to the safe banks. Don't buy now.
Because I'm an investor.
Okay.
I have a choice. I'm paying full price. I'm paying price to book 3, 4. I have a choice where to invest and where not to invest. I don't have to take responsibility of all the banks which are there. I need in 17 stock portfolio, 15 stock portfolio, I need 2 banks, and that's also not necessary to have a bank.
Yeah.
So when I'm finding absolute pristine bank, pristine NBFC or housing finance company, then only I buy. It must be quality, growth, longevity at reasonable price, period.
Okay. I know you have lots of questions. Agam, excuse me, I have one more question
No
on
worries,
banking.
no worries, yes.
And that is to do with the fact that even an HDFC bank currently today stands under threat because of all the, what everybody calls fintech, all the technology changes we're seeing happen to the
That, of
financial
course,
and payments business, right? So when do you judge that, well, this has been a great investment, but it's time to get out?
Yeah, so we are still not seeing signs of technology hurting them. Probably technology is helping them. They're in the forefront of technology implementation, but one has to remain open to complete digital migration. Now, it could be third level of value migration, where from PSU bank it came to first generation private sector bank, and from first generation private sector bank to the value can migrate very rapidly to second generation digital banks. Okay. But we are yet not seeing sign of. Somebody has to make money, isn't it?
Yes, of course.
So when migration happens, it's a better business model. So you have to see, because this is a very large profit pool. I mean, in banking system, you make almost 1 lakh crore profit. So profit pool is very large right now because of depression in public sector banks. Otherwise, private sector itself must be making upwards of 30,000-40,000 crores. Okay, so this is a very large profit pool. So somebody has to show me that I have opened a digital bank and it is making 1,000 crores profit and it is looking to be the way to go, and it is a threat to HDFC Bank. So by that time, we are not slipping.
Okay, sorry, Agam. One more question on banks. One last question. Just not listed banks.
Yes.
Are you interested, or would you look at? Because I know you sometimes also do unlisted equity investments.
Yes.
Have you put any money into any of the fintech players, as they call it right now?
No, not fintech player, but we just exited from AU Financiers from Jaipur.
Okay.
There we had listened to this story. We bought for 50 crores. At 50 crores valuation or 60 crores valuation, we put 20 crores, which gave us 30%, 35%.
Nice.
That was 6 years back. We sold it for 5,000 crores. 100x. That's the power of private sector.
How did you find this company, and how
Yes,
many
he
more do you
walked
have
in.
on your list, right?
Yeah, so he walked in. I mean,
He walked in.
He walked in. He wanted to raise money. And HDFC had given 200 crores of credit line. So we said, we'll
What
give
did
this.
he do? AU Finance, is
AU
it?
Financiers from Jaipur. You
Okay.
must meet Sanjay Agrawal sometime.
Okay.
Yes.
No. I've met some Sanjay Agrawals. They've not all been but so give us a sense of what you looked at in that company, or what you saw in that company.
Yeah.
That
So
drew
there
you
was
to
not
it.
much of business.
Yeah.
Business, of course, in financing, if you underwrite credit very well, you do make money. Some 1%, 2% you make. So that part is taken for granted. The person, the management, 1% chartered accountant, young, and passion and the integrity.
And what was he doing? A traditional lending business on a
Traditional
digital
online
platform?
lending,
Traditional
onward
online.
lending, So
Yeah.
it was very small. I mean, hardly maybe 10 crores gross income, 1.5, 2 crores net profit. I mean, we bought the whole damn thing for 60 crores. So what would he be doing? Not much. So it was a leap of faith. See, we are celebrating success. With that, we had many failures also.
Sure.
So, but the success, I'm telling you that in private sector funding or banking, there is a huge opportunity because this country is just exploding, and the traditional banks, for whatever reason, they are not able to reach out to the last mile.
Yes.
The branches are there, but they are not going out of the branches. So, all the work to be done, banks stop at the branch level. Even the private sector banks broadly stop at the branch level. All the dirty work or hard work at a client level is done by NBFCs.
Yeah.
And that's where there
Is so much value creation possibility. Yeah. Sorry, Agam. Okay, I'm done with finance if you want to ask.
No worries,
any more.
but considering we're talking about NBFCs right now, and I get this common question for guys who are already in NBFCs, when do we get out? Do we get out or no? And the second part is for guys who haven't gotten and lost out on that whole train. What do you do? अब क्या करें?
नए बंदे आएंगे ना बहुत lot of new ones are coming in. I mean, I just told you about one or two. Say Bajaj Finance, I missed it. To start with from 30, 40, 50, 100, 200, I kept on getting what are the prompts from many people, but I just missed it. We realized it only at 2,000 rupees. Of course, my other fund managers, they looked at much earlier, maybe at 200, 300. So as a house, we have been buying. But if you ask me personally, I noticed it properly about 2,500 rupees. From there also it is 10,000 rupees. So what I'm saying is there is no, I mean, one of the things in the book is don't come in front of a speeding truck.
Yeah. I think Agam has written that down. In fact, it's one of the quotes to challenge you with.
So what happens is, if something is going at a very rapid pace, see, most of the people don't know what is power of compounding. When you grow at about, say, 35% per annum, 30, 35, 40%, these companies are growing at 40%, 50%. Okay? At 40, I mean, even I can't do it. At 40% per annum, every 2 years it doubles.
Right.
4 years it goes 4 times. 6 years it goes 8 times.
Right.
So 2 raised to power, I mean, every 2 years it raised to power 1 goes up. So how much money they'll make, you cannot really calculate. So till that money making is on at a very rapid pace, don't try to put your head and say this is price to book 3, price to book 4. I mean, it doesn't work like that. Market will keep respecting the guys who have quality and who have growth. And then what happens is, since it is a quarterly result, you'll get to see, we're not sleeping, that yes, here it is slowing down. Then you can get out, maybe even 20% off.
Right.
From the top, if you are 20% off, it's better, rather than selling at 1/3 of the price.
Right.
Okay. One of the stocks that you've always spoken of when you speak of quality, and this is your, it's the investment you wear on your sleeve, right? Every time we talk, this is Hero, and it's been in the news recently because of, yet another sort of family reshuffle, if I may call it that. Do you see that, having any implications for the business in itself
Just,
at all?
I think it's a brotherly, I think the old man is no more there.
Yes,
respected Munjal Saab is not there. So I think the family must be getting realigned to whatever they want to do.
Yes, it says that. You don't see that as having any big commercial implication for the business in any fashion.
I think whatever I hear,
Yeah.
it was the truth, in the sense that that's how it was being run. It's just that it is getting formalized.
Okay, fair enough.
So, but Mr. Sunil Munjal is looking into getting into sectors such as defense and power. So, what are your thoughts on these two sectors particularly?
Not because Mr. Munjal is going.
No, not Mr. but
I have no idea.
it makes for a good
don't
case, I
correct,
suppose. What I'm driving to it,
Yeah.
it makes for a good case for someone like Mr. Sunil Munjal to go into these sectors. So, I was wondering what your thoughts are on it.
Which one is that?
Defense and power.
Defense and power.
Two totally
So
different
the power
sectors.
is an old story.
Yes.
Nobody
yeah.
made money.
Yeah.
Everybody's
Right.
relaxed.
Right.
So that's settled, okay?
Right,
Now
okay.
defense is a completely new game in town. Okay, this is the biggest contribution Modi government can ever have. After 60 years, somebody is thinking we must have our own defense production. See, it takes time. I mean, the defense is not that easy to. It's a technology intensive, it's a production intensive, and it's a precision intensive, and it has to have that safety angle. So, but your entire defense, all the three forces are dependent on imported stuff. Okay, so this initiative is truly deep-rooted, and it will have a huge impact after decades, I would say, after at least 5-10 years, because nothing can you suddenly build overnight. So whatever orders we are seeing, that is going to establish companies like L&T, Bharat Forge, and I mean, those are a few things. I think actually a lot of orders have not gone to private sector.
Actually, they haven't. I was just going to point to that out.
Yeah,
To
so
say
it has not
everybody
gone.
I've been speaking
So,
to these companies,
and
they
I
said
don't
it's-
see anybody. And third thing is that be careful. This is a business with government. There are three formats of businesses: B2C, B2B, and B2G.
Right.
Okay.
B2G.
B2C is the best.
Right.
B2B is you have to be careful with which are the companies with whom
you're doing
doing
business.
But B2G, both the years should be you should be very cautious.
So does that mean that you're an investor in defense from a 20-year point of view, or a 15-year or a 10-year point of view even, or that at this point in time you think it's too early to be able to pick those who might be the winners?
Too early, and
Too early.
we are not those VC type of guys. We are seeing in private equity a lot of these proposals coming in.
Sure.
But I have not seen anything worth investing as defense only. But I think this is going to be one of the biggest opportunity, and I don't know whether it will be investing opportunity or not. But it will have a huge impact.
Transformational for the economy. That's fair. You dismissed power as a potential investment opportunity, given the track record of the sector, and I understand that. But what about renewable sources of power, right? Solar is the big buzzword right now.
That's even worse, I think.
It's even worse?
Yeah, because capital intensity is 5 times more.
Yes.
See, you set up a power plant, say thermal power, you'll do say 5 crores and a megawatt, and actually it delivers a megawatt. So you do even the renewable at 5 crores per megawatt, but it delivers only 20% of that. So effectively, if you want a megawatt power, only 12 hours a day, 8-9 hours a day, in the night it doesn't work.
Yes, of course.
You still have to put up 30 crores.
I know, but
So is
it not the power source of the future? Is it not where...
It is the power source of future for Germany and Norway and Denmark, not for India.
Okay.
We need cheap power, even if it's a little dirty.
And so that has to be coal-based power, right?
Whatever.
Okay.
I think it is extremely capital intensive. Though the raw material cost is zero, and all the chartered accountants they'll make out that their IRR will be 12%, 30%. If we have zero interest rate, of course it works.
Right.
But we don't have zero interest rate.
But it is, after a point it starts, it's virtually free power. Though I must admit, these are all the arguments we made for wind power in this country. And we've seen that wind power did not really do, at least well from a financial point of view, right?
Yeah. So I don't know how somebody makes a lot of money.
Now finally seems to be on a turnaround cycle. But okay, your expression gives it away. So I will stop.
All the best to you.
I will stop talking about power. Go ahead, Agam.
No, so I wanted to ask whether or not infra and utility space also falls in a similar bracket. Because that's another deficit that our country has right now.
What's your name?
Yeah, my name is Agam.
Agam.
Yeah.
Agam, see, we are trying to figure out the companies which make a lot of money.
Yes.
And they make money in day, they make money in the night, they make money in winter, they make money in summer, they make money while it is raining.
Right.
Okay. We want 24/7, 365 days companies. You decide which are those companies.
Right.
So there goes power, there goes utilities of any other kind, and there goes infrastructure as well. Is
yes.
That's why we have only 15 companies in our portfolio, 17 companies in the portfolio.
That's it.
Yeah.
Okay. For those of us who are just joining in, Agam, I'm going to remind them where we are and what we're doing. For those of you who are just joining in, this is Bloomberg Quint, and we're speaking with a very renowned investor, Raamdeo Agrawal. Not only are we getting his thoughts on where the markets are right now, but we're also going to deep dive into his investment philosophy. In fact, he's already been sharing tidbits of that through the course of this interview, so I do hope you've been tuned in. Now, we have a question come in from Mr. Junjunwala, not Rakesh Junjunwala, Himanshu Junjunwala. He says, where is the market headed? Are we likely to see 9,500 before 8,000?
I have no clue.
You have no clue?
I have no clue. And I'm pretty happy if it comes to 8,000 so that I can keep getting a little more money, because everybody is waiting for the market to correct. So let their wishes be granted,
Okay.
And but actually nobody has any clue, I'm telling you. The best part is that, and that's the excitement of the market. And the guys who are trying to time the market, they will definitely be wrong, I can tell you this. So I don't know for sure. And that's why I don't time the market. One thing not allowed in this company is time the market. That's the biggest cancer of investing. So if you are investing for say 3 years or 5 years, that's the minimum horizon.
Yeah, well, at least.
Isn't it? So, and you would like to double at least.
Well,
so
at least.
3 to 5 years, you would like to double. Now, if you are looking for a 100% increase, if you have a 5-7% temporary downside, does it really matter? Let's do the job and be out. Be done with. Why you're burning your blood, by waiting for that 100 points or 200 points, 300 points decline. If you don't believe, see, and stocks are different from markets. Your markets can come down by 20%. But if there's a blasting performance, it could be up 20%, 30%. Infosys is up 6,000 times from 93 June when they came out with public issue.
93 June?
Yes.
Yeah.
Plus dividends. Plus dividends.
I think,
thousands of crores of dividend.
Yeah.
Tell me how much market has gone up.
Yeah. No fair. I get.
So what I'm saying is, let's not get into this market timing. In any case, I'm not good at it. And I'm sure there are a lot of guys who are there in the channels who can give them absolutely by the minute where the market is headed.
Okay, fair enough. Himanshu, I hope you got your question answered there very clearly by Mr. Agrawal. We have another question coming in, and this is from Arnab Das Gupta. And since we're talking sectors, he's asked for your views on healthcare. Now, this is B2C, so it should be something that interests you, Mr. Agrawal.
This is one of the most exciting sector.
Healthcare.
Healthcare. So now it has two angles. One is the domestic, another is the export oriented.
Correct.
So we are taking care of domestic health as well as all the global aging population. They need cheap versions of innovative medicines once they go out of patent.
Yeah.
So the generic versions are being supplied more and more by India.
course, yeah.
And this is going to be a trend bigger than even IT. Because the kind of quality India can produce in the small batches it can produce, very few other countries can do it. I mean, even China finds it very difficult to do US FDA approved plants.
Yeah.
So obviously what is happening is it's a big mega trend. The world is aging,
Sure.
world is becoming more prosperous, they're needing more money, more medicines. And India is extremely well positioned to do small batches, high quality, prescription driven medicines.
Yeah.
So that's why you see companies like Sun Pharma, which is now in just 20 years I think, they came public sometime in 96 or something, 96 or 98. And today they're world's fifth or sixth largest generic
pharma,
company.
yeah, that's
And still they are amongst the fastest growing. I won't be surprised in next 5-6 years it is first or second biggest in the world.
Okay.
So that's the kind of opportunity you're talking about.
But two questions there, Mr. Agrawal. One is, I think we've had a spate of regulatory issues, and I know you made the point that, there are many plants in China as well that have run into trouble with the US FDA. But we've had a spate of regulatory issues that Indian pharma has faced.
Those are short-term issues. Maybe looking at possibility and dominance of Indian companies or scale which is going up, the authorities in USA, they must have tried to bring to the notice that please guys, you are becoming big boys, get your quality right, so that when you scale up you will not have issues. So that is the message, and that's why you see once the companies are getting to that level, they are clearing also wholesale. Like in last 3-4 months, you've seen major clearances of the
But there are some like Wockhardt that keep getting served again and
I don't
again
have
with
any-
some certain notes.
no,
I don't mean to ask you for
so
a
what I'm saying
specific
is,
comment, but what I mean
it's a national
is...
opportunity. It's a country opportunity. If a product is not done by a company, it will go by from other company, but it will go from India.
Okay, my second
Yeah.
sort of exception there that I wanted to bring up is, we're very good at the generics game. We have not yet cracked the independent molecule game so far, right? How long will this generics game serve us? And isn't the cherry on the pie is really proprietary research, isn't it? And we've been talking about that in this country for 10-15 years and nothing's come off that. So how do you take a view on what companies to invest?
Yeah. So there are two types of innovation. One is the feature innovation and second the cost innovation. So when you are like the developed countries, if they have saturated on the feature side, they got everything in life. They have to do new things, isn't it? All the new things come from the developed world. They don't come from the emerging world.
Yeah.
Because they are so fed up with what they are doing today. Like if everybody has a car and the car is functioning very well. It is so perfect, there is no defect. Now they want to come with battery car. So that's a complete disruption. Biggest value migration will happen from a combustion car to battery car through your Tesla and all.
Yeah.
That's one of the huge global disruption waiting to happen. It's just happening in front of you. So India is blessed not with we need basic things. So we can't innovate for the features. Our biggest innovation will come our biggest asset is we can do everything at 1/3 or 1/4 of the cost.
But how long do you play the cost game?
Yeah, so you'll have to say like IT. First 10 years you played the cost game. Then they came for the scale. Now they came for the skill. Now there is nobody who can manage this complex, global, large projects. If you want 25,000 guys to implement something huge, global, it can be only India.
But you can see even now, Mr. Agrawal, that many of our IT companies, when we see the big shift happening to digital, are somehow falling short of being able to make that move smoothly.
Yeah.
So will that not also happen to pharmaceuticals? At some point you
Quite
stop playing
possible.
the cost game. So how much of the cost game is yet left to play is the question. And we have one more question, and this is sort of a question that has to do with stock performance, so I don't know how you'll respond to it. But SKG9Y, and that's an interesting name, asks, why are global Indian pharma companies not performing? So this has more to do with
Global
stock.
India?
Why are global Indian pharma companies not performing? So I
are
think he
global India
means
pharma
like the sons of the world. Why are stocks not doing as well?
See, this short-term performance and all, this is the biggest problem. You wanted the stock, stock is up 1,000 times in 10 years, and you are saying that from this 1,000 times, it has not gone to 1,010 times. Give me a break here. There's so much has happened.
So are you still heavily invested in pharma?
Yes, we are invested.
And-
Not heavily. Don't
Okay.
use the word heavily, but what is appropriate for a company, that we have done.
Okay, and have you chosen to take the bet across many different pharma companies that have cost to their advantage, or are you sort of narrowing your bets to one or two companies that have managed the scale game?
Pharma sector, only one or two companies will.
Only one or two.
Because we manage 18 stock portfolio. We have to have diversification.
So I'm fairly sure you're invested in Sun, because I don't know anybody who's invested in pharma and is not invested in Sun.
you can see the
so the second
portfolios.
company is
They
the
are
only
there.
one that's up to guess for, right?
Yeah. No.
So,
See, Sun, Lupin, Ajanta.
Got it.
So there are a whole lot of it. I mean, it's all disclosed portfolio.
yeah, no,
There's
I'm
nothing-
not suggesting. I'm just making sure that
Yeah,
we
yeah.
understand where you see
Yeah,
value. Yeah.
sure.
Okay.
So when it comes to finding value in mid caps and small caps, is it now a bottom up game? Is that the call of the day? Or can people still go about it sectorally? In
I
mid
mean,
caps and small caps?
I can answer this question on behalf of Mr. Agrawal for you, because this mid-cap, small-cap question gets asked to him all the
Yeah,
time.
see, it is not about sector and size and all. Ideas come in their own size and shapes.
Right.
Okay, so you should be open to see any idea at any size, any point of time, or any sector. I mean, it could come from power. If there is some unique power company which we might have not done so far, but if they come with a deep competitive advantage, extremely well run, fully integrated, why not? We'll do it. So the issue is that it is not about sector and size. I mean, I actually hate this small cap, mid cap, and large cap. If you are buying an aviation company, number one aviation company, it is not going to come for 1,000 crores or 2,000 crores. It is going to be 10, 20, 30,000 crores.
Yeah.
Isn't it?
Yeah.
So when we bought Indigo, I mean, the IPO itself is at 25, 30,000 crores. What do? Either you don't participate, don't look at that company, which is such a wonderful company. It has touched hearts of every single user.
Sure.
So the point is that I look at the stocks, and whenever we find an idea, even if it is 2,000 crores of idea, that also will do it. In fact, yesterday I was trying to meet a company which is 700 crores company. With same intensity.
Well,
as-
you just told us about a 60 crore company, didn't you, a little while ago?
That was- but that was 6
That was a
years
different
back.
guy. Yeah, I
Yes,
get it, I know. But I'm just saying that
Yeah.
it's not the size
in
of the
private
business
equity,
that matters.
in private
right?
equity, in any case, we see
I get
200,
that.
300 crores
Yeah,
companies.
sure.
Yeah.
I just want to ask you, if crude prices rebound, though the macro case right now does not
Against,
seem in favor of that, but yet, if crude prices rebound, if the Fed hikes rates and you see big disturbance in liquidity flows, is aviation still a promising sector for you to be invested in?
Actually, all these things don't matter in aviation. I mean, what matters is the competition.
Correct.
If
But
the competition
60 to
is-
70% of the cost of an airline is
That's
crude,
okay.
right?
It's all on your behalf. See, it's all
No,
the
yeah.
cost is taken by companies on behalf of the customers.
I get that,
The
yeah.
issue is, are there 4, 5, is the competition between, say, 2 guys or 3 guys, and are they responsible? Or there is 1 or 2, disruptive competitors. Those who want to, see, you sell it by differentiation, you sell it by lowest this thing. And if you have scale, if you don't have either of the 3,
Right.
then what do? You just go and disrupt it by selling at lowest possible price. And that, see, once you get in aviation, particularly in India, where is the price is extremely important. Nobody bothers about what color of the aircraft they're sitting in. It becomes very difficult for the other guy who is a full service to
It's a
come up with
downward
that.
spiral then,
Downward
right?
spiral. So I think that is the problem of the industry, and that's why the industry has not done well all over the world. And yet it's a very interesting situation in India where penetration is just about 1%. And there is a 4 billion people traveling by train, and train is still at the same speed which it was there 50 years back, and economy is just moving. So the number of 80 billion people are just traveling by air.
But Mr. Agrawal, this was the case, the bull case that was made out even when Air Deccan launched.
Yes.
And from Air Deccan to Kingfisher, full service airline, full luxury, there was a case, a market case for each one, a business case for each one of these players, right? And yet we have seen time and again that this is an industry dominated by the cost structure. And right now the cost structure is in their favor, but 1-2 years down the line it may not. So what do you do?
No, it is the competitive structure, whether you have a responsible player who has 40-50% share, which is there with Indigo today.
Okay.
I only hope that competitive structure, he's the lowest cost and highest scale. Typically, you don't get this.
Yeah.
Lowest cost and highest scale. I mean, if technically speaking, they can force everybody into bankruptcy, and still they might be afloat if it comes to that war. But I don't know what will happen, but this is a very interesting situation, and highest consumer satisfaction. All three. So there is a case for them to make money in the future. And this company doesn't make, it makes money without money. Fixed cost is paid by the lessors. Working capital is paid by the advance ticket sales. So actually they don't put any capital for doing thousands of crores profit. So very rarely you find this kind of companies.
They only put capital in circling the Mumbai airport for 45 minutes, burning fuel and not being able to land on time or turn around on time. It's a tough business, but you seem to be saying that you're expressing your faith right now, at least in airlines like Indigo.
Stock buying is all about buying a story.
Yeah,
We have a story in mind.
Yeah.
If it works out fine, it's one of the 18 stories. If it works out fine, if not, in that case, we'll change it.
Yeah. Okay. Aviation, Agam. So we've taken aviation off your list. We've taken utilities, infrastructure, energy, power. We've taken, I think, NBFCs, banking, financial services.
My God.
I think only consumer companies are left to go, right?
Yeah, I mean, in that case, I suppose you should be asking the question because now we come to OROP, 7th Pay Commission and GST.
And monsoon, which I think,
monsoon,
I think Mr. Agrawal's already given us a sort of a resounding comment on. But nonetheless, within the consumer space, what interests you, besides the fact that, we know what companies you've been invested in for a long time now, how do you see it move and change from here on?
See, consumption of most of the products, which are so-called FMCGs and all, are very, very low compared to the world standards, even compared to developing country standards. Okay. Second thing is that the competitive situation is very monopolistic. Look at, anything in India, while growth is ahead, maybe right now for a few quarters it might be slow, but you can't deny what they've grown in last 10 years. In the next 10 years, more or less same amount of growth is ahead. Now, in that situation, if you have growth and monopolistic situation, this is a complete open lottery ticket to make money. Because all these companies, they don't need any capital. They literally work on very thin capital or negative working capital.
Right.
Whether it is Imami, whether it is Hindustan Lever, Nestle, Britannia. You name these companies, Asian Paints, they deploy hardly any capital. So it's all free cash flow. And that to growing free cash flow. For 10 years, 20 years, 30 years at the rate of 20%. Do your DCF at 10%. And with the falling interest rate, you have to do the discounting at even lower rate.
Yeah.
Right.
And the present value keeps growing. And most importantly, we are talking about 8-10% discounting rate. The guys who are coming with FI money, they are talking about 3-4%. They're pretty happy. Japanese would be very happy to make 5% dollar return. So, the value, see, the stock is there. The value in the mind of Indian consumers or Indian investor is X, and it might be 2X or 3X depending on what is the source of money, what is his return requirement. So these are kind of challenges, and opportunity in consumer space is because of security.
Agam, didn't you just do something on Asian Paints that sort of raises the question on whether it has, sort of run out, or whether it's likely to run out of steam in time to come from now? I'm talking about the stock price, not the fundamental performance of the company, which is...
So what I did was that I run an average of the Bloomberg consensus target. And currently, the difference between the target price, the average target price, and the current market price is at its widest right now. And also,
What is it is negative.
The current market price is a lot higher. In fact, it's at
That's
a
what I'm saying,
12%
it's negative,
price.
no?
Yes.
Target price is
Outpace
3,000,
the
but
consensus.
prices say 4,000.
Right.
Something like that. Yeah.
So, there were some questions when I did that story of whether or not that means that Asian Paints is overpriced or overvalued, for which
analysts were, running
or whether
behind the curve.
analysts were behind the
Running
curve,
behind.
and that required analysts to up their own price targets.
See, analysts are not supposed to give the price targets. In the sense that that's not their job.
Right.
Their job is to estimate the earnings. Because, as I said, there are three prices. Prices emanating from Japan, prices emanating from America, prices emanating from Mumbai. All the three costs of capital is different. So, technically, what is the value? Forget about the price. Value itself is different. If you do the discounting and cost of money to be different. For the given same cash flow and growth in cash flow.
Right.
So, that's what is happening. Right now, the stocks are fewer and fewer. Whatever money is coming from FIs or even domestic money, that's all trying to get into those 50, 100, 200 stocks. And Asian Paint stays as almost in the forefront of those kind of stocks.
Right.
Where there is a quality, there is a growth, there is security. And there is a huge confidence that for next 10, 15 years, they'll keep growing the way they have grown in the past. Because housing is yet to happen in India.
Yeah. And I think just the fact that they have such a, so I don't want to use the word dominant because it's interpreted often legally incorrectly, but such a fabulous market share or a
and
market
still gaining
position
market
in
share.
that sense.
Still gaining market
Yeah,
share.
still gaining market
And
share.
there is no online way of painting your house.
There's no online way of painting your house. That's true. If we've run out of sectors, I think I want to come back to the question that I wanted to ask you right at the beginning, Mr. Agrawal, and that is, look, I know that you're bullish on the Indian markets, and for all practical purposes, the last many years that we've spoken to you, you've almost always been positive about India, right? Even if you're short-term negative. The question we get asked often as journalists is, you all interview all these bulls, and of course they've got money invested in the market, so they're going to say good things about the market, right? A, how do you answer that? And B, if the Fed were to hike rates tomorrow, that's tomorrow's problem. Or 2 years or 3 years down the line, at some point we'll start paying the price for all this easy liquidity. Then what do you make of where our markets will be?
But let's first do the party, no?
No, fair
Then
enough.
we'll care about the hangover after that, See, what I'm saying is that the markets have their own tendency of going up and down, in the sense that at some time it will be extremely euphoric and sometimes it will be very depressed. So depressed and normal, what is there right now, middle kind of a situation, is very, very favorable. You go and find your stock and this thing. I don't care so much about the market. I care about what ideas I'm getting. There's so many new IPOs coming. There's some wonderful companies going IPO.
Correct.
This time the difference in the IPO is that most of these companies are private equity funded companies. So somebody has put up these companies in a very nice shape before it comes to public. But growth is ahead.
Yeah.
So you have a lot of opportunity. See, I don't look at investing, I don't bother about 5-10% movement of the price, so long as my stock is doing well. I am buying the earnings power of the company. I'm not buying by the price. I want the reasonable price. Say if I bought something at, say Indigo only. Okay, we bought it, say, I was avoiding that. So about 800, 900 rupees. Okay, now, see, the stock price may move up or down for whatever reason. But I'm more happier, I care about is the quarterly results. How the earnings are coming, how earnings are shaping up. Because if earnings has come as per expectation, which we expect about 25% growth, if it has come with 25% growth, I don't care even if it goes to 200 rupees. Because it will go to 1200 rupees from that 200 rupees. I have that faith.
I'm so sorry to interrupt you, but I want to argue here that this big liquidity run that's reflecting in asset prices across the world is doing just that. It's reflecting in asset prices. You start testing demand, and there are pockets of demand in the US, but you look at large parts of Europe and there isn't much. China has been a disastrous story in the early parts of this calendar year itself. So I'm just wondering, and when I say Fed rate hike, or I mean the liquidity party ends, I'm not referring to just asset prices. I'm saying today asset prices are looking good because of all of this, not because of underlying demand. The day the liquidity party shuts down, we're actually going to see a much nakeder version of underlying demand, and that may not be a very pretty picture. No?
No, I don't think so. First thing is, this macro kind of thing doesn't
interest you. Okay,
doesn't
fine.
interest me. I'm a simple guy with very low IQ or very average IQ, and I want to figure out which company is going to make a lot of money in a given situation. Okay. And situation, see, what I'm saying is that some situations will change. Sometimes US will be in a forex situation, sometimes Japan will be in a forex situation, sometimes Europe, and sometimes India itself. Last decade was a story of China. Next decade could be a story of India. So there is a good chance, and there is more than 50% chance, 60% chance that it could be the decade of India.
Only 50 and 60. Some of your compatriots in investing have called it what? Mother of all bull runs, right?
No, but
the last time we spoke to Ramesh Tamani, he said what? Ab ki bar Sensex 50,000. He said it tongue in cheek. No, he said it tongue in cheek. I should be honest. He was not fully serious. He said it in part jest. But even then, ab ki bar.
Not very far. 50,000 to kya hota hai?
So this is now, here's where you respond to my question saying you all are heavily invested in the markets. So, the only thing you will ever say are good things about the markets. That's the criticism we get from a lot of investors, right?
Actually, I don't want the index to go up.
Why?
I'll make money if market doesn't go down. If index stays at, say, 9,000, 8,000, and we can make a lot of money. See, you make money two ways. You make money two ways in the market. One, when the market itself goes up. So that's a beta kind of thing. If market has gone up by 20%, you expect that everybody should make 20%. Second is that when a company does better than other companies. So market cap of the whole market might remain 100 lakh crores only, but within that,
The company is
a company can move from 1,000 crores to 10,000 crores.
Yeah.
I want to make money like that.
Okay, fair enough. I know Agam has some more questions on your investment style, but I'm going to take a quick few viewer questions, Agam, at that point in time. So we have a bunch, and we've answered some of these already. Your views on healthcare, we've answered. Akhil Chaturvedi writes in saying people are talking a lot on current valuations which look expensive, incremental flows have slowed down, lots of investors redeeming from markets. What will you say to investors on this one? I think you've partly answered that already. Vikram Kasat asks, saying, sir, can you identify the best sectors to be in? Right? Then I think one gentleman has written in, Abhay VK, saying, do you share Mr. Murthy's view that smart city is far away? I'm not sure we'll get down to the answer to that question because we're running out of time. And finally, we've got one question coming in from Adroit Trader View on the Birla Group restructuring, so on the Birla merger that was announced yesterday. And one more question coming in on what are the first red flags to look for. So here's the question, it's a long one. Any company when suddenly it becomes 5 times market cap, what to look for? What are the red flags to look for? I think the 5 times is the red flag, I would think. But anyways, so okay, can we start by getting your thoughts on the Birla Group restructuring? Are you invested in any of the Aditya Birla Group companies? Because many of them are commodity companies, not as much B2C, which is, your style of investing. So
I don't think so.
No.
Yeah,
So you don't particularly...
we might be invested in Ultratech.
Cement, yeah.
Ultratech
Okay.
and some retail company and all.
But there's no direct impact on Ultratech in any way, except
so
that some
that's all
some
end
restructuring.
company,
Yeah,
so
exactly.
There's no impact on that.
Yeah, so you don't have a view on what happened or what was announced yesterday?
I saw. I'm still
Studying. Stock increases 5 times in market cap. What first red flags to look for? Let me generalize that question, right? When you look at an investment case, what do you look for in that company very clearly in terms of numbers? And what would you definitely avoid in terms of, if you saw these 3 things, you would definitely not invest in a company?
Yeah, I wish I could, open the screen and show you how exactly, if you give me a company's name, how we travel, like 8,
But just give us a big picture view if you can.
So, the first thing is, let's figure out whether there is a franchise. See, I'm talking about a company which I have never heard. I mean, you'll come and tell me XYZ company's name and you'll tell them that they sell some product. And it's just flying, it's doing very well, and you have tested the product, it's very good. Now I say, okay, hold on, let's go to the screen. And first thing you figure out is what is the corporate performance. Okay, so is it making money or not? First thing. If it is making money, what is the return on equity? So return on equity, I don't like to see any company which is not having return on equity upwards of 20-25%. Okay, the moment it is 20-25%, I'm talking about most of the cases. If it is more than 20-25 cases, then is it increasing or is it stagnant? Okay, then immediately go and see what are the terms of trade. The moment it is making profit, the cash flow is dependent on, is it a company which is what are the terms of payment? Is it payment on cash? Is it payment in 10 days, 15 days? Because that tells me a lot about the strength of the product. Because I still have not gone to the field to figure out how strong is the product. But then terms of trade tell me if a company is prepaid. I mean, before even you get the product, you have to pay. You don't pay like that for many of the services and products. Only if it is very strong, monopolistic kind of thing. Or you get paid in less than 30 days. There are very few companies in consumer products which get paid in less than 30 days.
Right.
If it is a volume growing rapidly in less than 30 days debtors level, that tells me a lot.
Okay.
So, and then immediately you go to the cash flow. Where is the operating cash flow? Where is the free cash flow? Once operating cash flow is there and growth is there, then I'm interested in hearing the full story.
Okay.
Okay. Then we try to figure out how is the length, how long this story can go on. It's a matter of judgment. Is it a 10-year story, 20-year story, or 30-year story?
How do you determine that? How do you determine that?
You see that is where the experience comes in. So if it is a consumer product company and it's monopolistic and worldwide it is, say, McDonald's. It's a franchise which is very successful all over the world.
Right.
Okay. Now in India they are also successful. They are successful to get the consumer attention, but they are yet not successfully they're not very financially successful, so to say. So if that company starts earning 20-25%, we know the longevity of this franchise is very, very long. And second is what kind of competition it is facing.
Okay.
So immediately after that, the longevity is dependent on how long the demand is going to be there. Say a paint company, the demand is going to be there for next 50, 30, 50, 100 years.
Yeah.
The issue is whether this company's fortune can be impacted by many companies. If there are 20 companies jostling there and entry barrier is not there, then the story could be for 1 year, 2 year, 3 year. So that's how,
You said something about not investing in companies that have an ROE of more than 25%? Less than 20. I was just
less than 15.
I heard less than 15. Less than 15.
Less than 15 is no, absolute no.
1.5. Less than 15 is no.
Yeah.
Okay, fine. So that gives us a sort of an insight into Raamdeo Agrawal's, sort of what you have, the hoops you have to jump through to actually meet any criteria or investment criteria of his. You had a couple of questions on his investment style.
Yeah, so I know that you hold Warren Buffett in very high regard, but you've also spoken extensively about how Warren Buffett himself has evolved as an investor in his earlier years. So through his evolution, what have you drawn personally as an investor?
I mean, everything is given by him. He is my unqualified guru, 100% guru. So let me tell you my background. I started buying stocks in 1980 when I was a student of CA, and there was a lot of excitement. Okay, you can wake me up at 12 o'clock in the night and still talk about a stock. That kind of excitement. And we had a lot of guys who were talking about it. Then I did CA, started this thing, and I read all the balance sheets because that time there were not much books available. So I read 200. In fact, I used to have a balance sheet library of 200, 300. Okay. In fact, the job I did for 2 years, I went with 200 balance sheets library to the office. Okay. So, but then till 94, I was thinking I'm a smart guy in the stock market.
Right. Yeah.
Till I met Buffett. Buffett's annual letter. Somebody sent me, Sanjay Bhattacharya, a dear friend of mine. He gave me that one physical copy of annual letter. And then it came like a bolt from the blue, that here is the light. I mean, actually, I could see the light of investing. Right. So it something works at times, your mind is searching for it and it comes through. And then I went to read the 1967 till 94 every day morning. Used to get up 6 o'clock, 5 o'clock, used to read 23 pages and come to office. So that's how I completed all the 30 years of this thing. And then we started writing wealth creation studies from 96 onwards. And then every year it keeps coming. We keep going to Omaha. We keep listening all the CNBC and all those interviews, all kinds of. And now there are thousands of books on that. That time the books were, there was Making of the Capitalist by Lowenstein. Those were the few early books.
Now I think it's
now by the day, by the week, you're getting the
books
book.
on Buffett.
So. And his own biography, the Snowball. It's a wonderful read. I mean, if you read that book, then you realize what it took for him. See, this guy started from literally zero. I mean, to earn that $1,000 or $2,000, $10,000, the kind of hardship he has gone through. I used to think I have gone through hardships. He has gone through 10 times more hardships. So, in one lifetime, to start in Great Depression in 41 and to reach here, almost he's $360 billion. And he's 86 years and he's definitely going to live more than 100. So in next 14, 15 years, he will be a trillionaire in one lifetime.
He will, yes. And even then, Buffett does draw critics, right, for his style of investing.
Anybody.
So I suppose it's this is beauty lies in the eyes of the beholder. You like a particular kind of investment strategy and you prefer to go down that route. What would you not do that you think, or what would you think that Buffett's done this, but you have a different view on this?
Yeah. So we have done a lot of things
which are differently from him. Which are what? Give us an idea.
So, see, first thing is the companies will not match because they are operating in US.
Yes, of course. That I get it. Yeah, so that's totally
second is that he's not that hung up on growth. If you see QGLP, quality growth, longevity at reasonable price. So growth is very integral part of our investing style. Quality, the way he has taught us what is quality. Okay, so what has, in fact, the biggest damage he has done till 1965, what used to happen was, it was a market of breakup value, There are three sources of value: breakup value, franchise value, growth value. So the whole market was about breakup value. If it is a $100 million company, you're getting for $50 million, you go and buy and make some money. There was not so much of appreciation for quality. Charlie Munger came and told him, because in fact Berkshire Hathaway was his biggest mistake, because he bought a junk company, thinking that it's very cheap. Then he comes and tells him, don't get into this kind of things. It took him 15 years to get out. And then he started telling me the power of quality. Then he started buying Seas Candy, American Express, Coca-Cola, and all rest. All you see that. But then they started writing about quality in the balance sheets. So people like us, duffers like us, we started learning about quality. And there are 5,000 books on quality. So now by only buying quality, which is fully priced, you cannot make money. So what needs is quality and growth. And little bit of mispricing. Mispricing. So misprice, quality and growth is what is the way to go. That's what my thinking.
Okay, so that's the slight deviation. What else on style before we wrap it up? Because
Well,
I think we've exceeded the time Mr. Agrawal has also granted us.
Yes, absolutely. So I'm just going to ask you the question on market emotions, and the markets have long been associated with greed and fear, but these days there's been a lot of talk about envy and hope. Do you have any thoughts on this? In fact, I was actually going through this one quote from Charlie Munger, who said in the past, he's also said that the world is not driven by greed, but it is driven by envy.
Envy, yeah.
So how does this relate to markets as emotions, and do you have any thoughts on this one?
I mean, I learn only from them that don't be envy. I mean, don't be envious of somebody else's wealth. You do well for yourself and be happy, whatever you have, what God has granted you. So if Buffett has made $300 billion or somebody has made multiple $1 billion, that doesn't interest me. I'm really thankful God has blessed me. So I'm very happy with what I have and what I do. I think real blessing is that you get to do what you love to do, what you're passionate about. So that's what is the biggest gift anybody has given, and I'm enjoying that.
Yeah. Okay. I know you had this question on your list, Agam, and I wanted to ask it as well. Do you ever get out of stocks that you love, and when or how do you make those decisions, right?
We sell. I mean, we are not forever. That's another difference
between you and one.
I fundamentally think that this market, the whole market system allows you, small bits of purchases, diversified small purchases, and we must not lose that. You can buy when you want to buy. You can buy as little as you want to buy or as big as you want to buy, and you can get out whenever you want at your mercy. So you can own the businesses what you want to own at any point of time. So in the first decade of 21st century, you want to own these 7 businesses. In the second decade, you want to own 7. So you are entitled to best of the breed at any given point of time.
But how do you determine when you exit? Like, do you have any financial parameters on the basis of which you choose to exit? Could it be valuations or?
So two things we definitely do. One is when we are wrong, we run. Because we are also not God, in the sense that we commit mistake in terms of picking stocks, wrong stocks. So that is a absolute, we have done enough in the past. And when company is wrong. So company is successful and then suddenly they get into some crazy business. So then you have to run because it's a misallocation of capital.
Yeah.
Okay, so or you realize that company has outright, it's a fraudulent company or something like that. And at that point of time, you might be getting 10% or 20% of what purchase price you had. Still you run. So when you realize there is a mistake, either by us or by other side, you must cut your losses and move. So actually the difference between us as a manager of money for other people also is that we love to book losses, where the people love to book profits. That's a fundamental difference.
Okay, one final question, and it's come in from a viewer, and he asks, can you suggest any good books to read? And I thought that's a good note to end on.
You can run your camera across the library.
Your bookshelf? Okay,
yes.
we'll do that. No, but a couple of, because we run a very popular sort of segment on Bloomberg Quint as well called Libraries of Leaders. Where we track the books that people read and the books that inspire leaders like yourself.
The book reading is a big game. In the sense that, what is that for a startup? The best read on investing is those 40, 50 years of letters of Warren Buffett.
Yeah.
Okay, if you are a Buffett bhakt. If you're not in that, then also you should read actually. Okay, so that will definitely take you from a level to different level. Second, you can see these are all heroes you have to find. Basically, say Peter Lynch or Benjamin Graham in security analysis and intelligent investor. Then you have
Phil Fisher.
Phil Fisher, common stocks and common profits. That's a absolute must read. In fact, all the trainees, they come here for 2 months. We give them we give a
you give the copy of it.
And we expect them to do the scuttlebutt, and that's what tells you what to do. Actually, QGLP is nothing but basically scuttlebutt, much more in a understandable fashion. So, I mean, a company is a company. It's a story. It's a somebody's journey. It's a piece of art. So, how do you figure out which piece of art is valuable? What are the things you look for? And in that piece of art, what I try to look for is that which company or which piece of art is going to make a lot of money. You make only as much money as the company makes. So our job is only to figure out, not this global macros and all. We have to figure out who is going to make money. Period.
Do you read anything but financial books? Any fiction, non-fiction?
Bollywood?
Bollywood?
Yes. After Friday, it's all like today is Friday now. Party starts.
Okay.
Yes.
Let us not delay you to the party then, Mr. Agrawal. You've been very generous with your time, and we're very sorry if we've exceeded it. Thank you so much for talking to Bloomberg Quint and all our viewers on Facebook Live.
You have been fantastic.
Thank you for your time, sir.
Very good. Thank you.